All right, welcome back to Dre Trades. And today's an interesting video because I'm going to go over some different stocks. And I think today is critical. Basically, I got some good news and bad news. So I'm going to show you the bad news because I do feel most of it is bad news. But I'm going to show you why I think it could be good news. But here we go. The market price action is terrible, especially in the Dow. And as you can see, the Dow is only down 3 points, but the thing was, I think it was up like 300 points today, and boom, just reversed. Nasdaq's been reversing ever since it opened. You know, just as soon as people was just taking that little pop that they had in the Nasdaq and sold it all day. Nasdaq down 2%. S&P for the most part was doing well as well, but it gave it up in the end. Oh man, it was the Nasdaq that basically brought down the other two averages. And here's the heat map. So all up here is all the top half of that heat map is Nasdaq, the big boys, and you can see how they're down hard. I remember Facebook was just it looked like it was going to go to new highs. Now it looks like it's just going to go right back to the bottom of the channel. Right now it's at 282, and yeah, everything else was working. Financials up again, healthcare, industrials, energy, and utilities, basic materials, and whatever. All right, so let me show you some stocks. We're going to go over about 12 stocks, and I'm going to show you this critical stocks, it's on life support, these stocks, and this is what makes me think it's bad news, but I'll explain why it could be maybe good news as well. All right, first stock is Palantir, and we're going to be looking at the weeklies. I may switch to the dailies here and there, but for the most part, we're looking at the weeklies. And what I want to show you is the head and shoulders pattern that I'm seeing in a lot of these high-flying tech stocks. The tech stocks of 2020. It's kind of scary, right? Because the head and shoulders pattern it's a pattern that's pretty solid. And when it breaks, it could go down pretty hard. Generally, the head and shoulders pattern goes from the head to the neckline, and that's the distance that we'll travel down. So I use this as an example. This is Palantir, and you can see the shoulder, you can see the head, and then you can see the next shoulder. And then if we break here, we'll break down to something like that. And the distance is this distance right here from the head to the neckline. So keep that in mind when we go over the next few stocks. All right, so like I'm saying, so here's Palantir. There's the head, the shoulders, and you can see the break. It's right at critical. It's at the critical level. Right now, it needs to make up its mind. Is it going to bounce from here? Because one good thing, and this is the good news, I'll go ahead and give it to you now. When stocks are faced right at this level, in jeopardy of breaking that neckline, it could reverse. It could be a fake out, and then they'll reverse hard. I'm talking hard to the upside. And that's what we want to happen if we're a bull. If we're a bear, we want to see it break and go lower. And let me tell you, say for this stock, not much. So I'll go to the daily. Not a lot of data here, but you can see the next level of support is kind of here. Let me draw that line right there. And then you can see the next one's right here. And the next one will be way down here at the $10 level. And hopefully we don't see something like that. Let's go on to the next stock. Peloton, my favorite. I go ahead and clear all of this out. And here is the neckline. Here's the left shoulder. Here is the head. And this is the right shoulder. Now, these stocks are not all putting the pretty picture head and shoulders on. But for the most part, these are head and shoulder patterns that could evolve into the head and shoulders. And look at the head here. This is a huge head. It's about 50 points for the most part. So if it does break here, we could see Peloton go down to the $50 level if it follows head and shoulders pattern, the way it will break down. And that's way down here. Hopefully not. Hopefully it's the fake out and we can break up here. One good thing about Peloton, it's been solid around the 100 area. The buyers did come in. So let's see if it's going to happen now. So right now it's at a critical level, 101. We don't want to see it break that neckline. Let's go to the next stock, and that is Roku. Remember, looking at the weekly, this one just looks like an up down, but if you look real close here, let me pull up the daily. You can see it a little better. You can see that head, that shoulder, that head, and then the next shoulder's and here's the neckline. I'll show it to you. Right, so there's your neckline, shoulder, head, shoulder. So if that breaks, look at that distance right there. That is about 81 points. If that were to break down, and we're going down to somewhere right about here, that's the 81 point level. And you can see that is right at support. And that's way down here. Oh my gosh, 220. Right now it's 318. That's basically another 100 points to the downside. Let's hope these are wrong and it's a fake out and it'll break hard the other way. So I'm telling you, one of these two things is going to happen. I am confident one of these two moves is going to happen. The hard breakdown or the hard break up. I don't think anything else is going to happen, like no sideways movement, or it's just going to be one or the other. And that's to my experience. Let's go to the next stock. What's that next hot flyer? DocuSign. Let's go back to the weeklies. And you can see the same thing. I kind of got a bullhorn type pattern, which ain't the greatest pattern either. But you can see the head, the shoulder. You can see the head, and there's another weak shoulder. And critical moment. Look at that right there at support. And is it going to break or not? Maybe the stock has room to move down another 2%. And if not, we're going down hard. You can see that distance right there, 63 points. Are we going to go down 63 points, which will put it right about here, right? Okay, so that's not good at all. That is DocuSign, but right at a critical level, it does need to bounce here. Next stock on the list, NEO. And you could see that head and shoulders. Some of these I have the line drawn already. That support right there, and you can see it's kind of break. Let me go ahead and make a new line for this one, because it's more on an angle, more like that for the most part. And you can see the left shoulder, the head, and the right shoulder. Huge distance from top to bottom. That's 17 points, and 17 points to the downside is right here. $20. So we'll be somewhere around that area of support, that $20 level. Wow. NEO. I actually think that will be a good deal. Let's look at Snow. And not a lot of data on Snow. It's a new IPO that popped not too long ago. And for the most part, you can see the weekly. So we're going to have to go to the daily so we can get a little bit more data. And this whole pattern is, here's your shoulder, here's your head, and kind of a shoulder. But this one is not the greatest head and shoulders, I'll admit that. But the reason why I have this on the list is because right there, we're getting ready to break new lows. And once this breaks down to new lows, it could go down a lot. It can go down a lot. The reason being, everyone that bought the stock since it opened, except for the IPO people, but everyone that bought the stock since it was being publicly traded will be underwater, will be losing money. Therefore, who knows when they're gonna? It could be just a rush to the doors and everybody just sell in the stock and just drop. There is no support below this. There's none. Maybe the IPO price, and I don't know what that price is offhand, but maybe we could slow down at the IPO price. Let's move on to another high flyer, and that one is Fastly. Oh man, here is your level of support. This one is not the greatest head and shoulder pattern, but you kind of see it's got that, but what's important here is it's sitting right on that support line, and it could break. Actually, there's a little bit more room before this one's got a little bit more room to go down before it hits that critical area. But if it does, you can see we're going way down, and we got a level here, and then for the most part, we got a level here. Actually, this one I'm gonna kind of clear out. Let's remove that one, and maybe it's more like here, right? Okay, so that's Fastly, and Fastly already had that hard break over here. And if you look up, for the most part, not counting that one, it's a lower high, and then are we gonna make that lower low? If we do, way down here, I mean, $64 on Fastly. Fastly was once a $136 stock. For the most, Fastly is already down 53% from its high. Let's go to the next one, and that one is an ETF, and that is the SMH. I'm gonna have to zoom in on this one so you can see what's going on. And here's your left shoulder, and let me clear all of this out. Right, here's your left shoulder, here's your head, and here's your right shoulder. I can draw the line like this, something like that, right? And then if we were to break, you know, we're going from there to there, which is about 26 points. And then that brings it down to right about here, right about here. It was at 24, 25, 26, right about there at a $200 level. Kind of makes sense. Nice and even. SMH down to 200. Small head and shoulders, but break it down as the head and shoulders. Let's look at the daily on this and you can see it better. Oh, yeah, there it is. There it is. There's that left shoulder. Here's the head, and here's the right shoulder. Looks like it still has a little bit more play before it reaches that critical breakdown point where it needs to decide, are you going to break lower or just turn around and rip higher? Want to hit another one? Sure. Let's hit another one. Teledoc. Never been a real fan of Teledoc. I brought this up on a video prior. I think it was yesterday's video. And not necessarily a head and shoulders. This one's a little hard to actually look at. This one is a hard one. All right. It's not the greatest, but look at that bear flag right there, you know, coming off the top. And then there's the flag. And then we could break lower. Generally, with a bear flag is you would break the distance of the flagpole. That's right here. Or if you want to count this a head and shoulders, it's the same thing. You'll break the distance of the head. So basically, this could bring it all the way down. I mean, I'm just kind of guessing on that level. I didn't look at the range, about $75. All right, so that's unbelievable, right? That's a huge break in Teledoc. And remember, it's down 6% today. Amazon is stepping in the field. Okay, they stepping in the field of telehealth services. So, you know what happens when they get in your field. It gets kind of ugly for the competitors. Next one, let's look at Twitter. Twitter, yeah. The weekly. Twitter was Twitter was solid. It was solid for the back half of the year. And then it broke out of this channel range. You can see what happened. I mean, this thing went from 57 out all the way up to $80. A lot of, media was getting on, a lot of media hype for Twitter, going to some kind of subscription base, kind of like that OnlyFans kind of model. And ever since then, it's coming back all the way down into the range. But if you look at it, we're right here at support. We're right there right now, right? For the most part. Right? So, but it looks like we can go a little further down. There's stairs on this one. So maybe if it brings it to here, the middle of the range will bring it to about 56. The bottom of the range will bring it to about 50. But right now, the important thing is we're right at critical support. I'm going to clear everything out of here and just kind of draw this right here. And is it going to break or is it going to go the other way? All right. This is not the greatest support area. Let me pull it to the daily. Look at it. Yeah, it's filling the gap. Yeah, so that's a good support area. So you're right there at the gap. Are you going to turn or are you going to break down? And if you break down, you can see the next one's way down here at 55. Right. So Twitter is on life support as well. How about this one? Snapchat. Since we're talking about Twitter, let's talk about Snap. You can see the head, the left shoulder. Let's go up to the weekly. These are better on the weekly. By the way, the bigger the time frame, the more solid the patterns could be. And that's, I'm always looking at weeklies unless I can't see something, then I downsize to the daily. But you can see it's a little tight in here, and that's why I guess why I was on the daily. So let's look at the daily. You kind of got a left shoulder, head, right shoulder. Right? And you could see that critical area of support right there. I mean, every time it hit this area, it turned around. Is it going to do it this time or is it going to break through? As you can see, Twitter is on life support as well. Are we going to break down to the next level or are we going to turn around right here and start to head higher? Time will tell, and that time is probably within tomorrow. We might know tomorrow or the next couple of days because these are right there. Volatility is high. I can't see that. I mean, Twitter is already down 8.6% today. So therefore, these stocks is moving. I can't see Twitter just being flat. It's going to make up its mind within the next couple of days. Twitter is on life support as well. How about this? Everyone's getting a shot. Moderna, nice high flyer of 2020. And here is your head, left shoulder. Here's your head, your right shoulder. not the greatest head and shoulders pattern, but you can see right there is on critical levels. The good thing, the difference here with Moderna, it's on an uptrend line, right? Notice that I got it going that way instead of this way. It's downtrending or just being flat. So is it going to break down? And if it does, yeah, it probably come to here. Probably come somewhere to here, and that's 101. That's the 101 level. And if it were to do that, that is a 22% decline from today's level. And I should have been measuring these for the other stocks, because you could see the level from breaking down to the next level of support is huge. And if that were to happen, like say Moderna's down 20%, Twitter's down 20%, SMH down 20%, that from these levels where it's already down a lot, that's a lot of damage in the market, because you can't just imagine everything's just going to be fine except for these stocks. It's going to bring fear in everything into the market, right? So it's going to be a new market if all of these stocks are all of a sudden dropping an additional 20% from where they are now. If you were to do the whole thing looking at Moderna, let's say, and you go from the top here all the way down to where it could possibly break, that is a 46% decline. I mean, that's for the most part a crash. You know, that's 50% off of Moderna. You know, I like to call those levels, they crash levels. They didn't happen slowly. This would have happened in a matter of what the top here was February 8th. It's the end of March for the most part, in 6-7 week period, down 50%. That would hurt. All right, so that's the bad news. Let's look at some good news, and it happened after hours, and that was Restoration Hardware. How the stock was down 4.6% today, but they reported a solid earnings after the bell, and so they closed at 485, and right now the bid ask is 527, 528. So this one's going to have a nice pop tomorrow morning if it holds. So hopefully, maybe, are we going to be led by Restoration Hardware to kind of bring us out of the hole, to make us turn? I don't know. So like I said, the good news is, and I kind of favor the bad news, all right? But the good news is that all of these stocks are at the level of support. Do they bounce here, or if we break, I just think it's going to be ugly. I just think this break is going to be ugly, as a lot of stocks are there, and they're going to have a long way to go for support. But if they can all bounce here, it could just bring some rally type to the market. The one thing that's interesting, and let me bring it up here, and that is the 10-year. You can see the 10-year. Right? When the 10-year was going up, when the yields was going up, stocks were going down. Well, guess what? The yields are going down and stocks are still going down. So much for that correlation, because right now the 10-year yield is 1.61%. And then you can look at the TLT and see what that looks like. You can see how the rally, this is the weekly, let's pull up the daily. You can see how there's been a little rally off the bottom here, but stocks are still going down. So stocks track this down, but now that this is going up, stocks are still going down. So there's your disconnect. And I guess we don't have to look at that connection no more. But the one thing that bothers me about the 10-year, I do think if some reason the yields were to start going back up, even though stocks are kind of going down now, that will bring stocks down the hardest. So my prediction is, if we break, maybe it has to do with the yield starting to rise again. And then now it's like, oh my gosh, now more momentum to the downside on these tech stocks. And maybe that can bring it to these levels of down 20% or whatever. So like I said, life support. Let me know how you like this video. It's to pull up that many stocks and seeing the same thing. It's kind of scary, and it makes me really bearish, but I'm not quite yet ready to jump on that bearish bandwagon yet until I see the break. I want to see what happens right here, right now. Okay, so once I see that break, boom, I'm on the bearish tip. Now I'll still be long stocks getting crushed like everyone else, but maybe I'll put a couple of puts on, but I'm investing long term, so I'm not going to worry about it too much. I just hope there's not a lot of damage done, but it doesn't look good, as you can see. a lot of these stocks with the head and shoulders, and just think I didn't even bring up all of them. I'm sure there's many more. All right, so thanks for watching. This is Dre Trades on Twitter, on Instagram. Hit me up in the comments. Let me know what you think, what's going on. Let me know if your stocks are sitting in this little head and shoulders pattern, or is it at that critical levels of support. Like I said, Twitter, Instagram, or right here in the comments. So thanks for watching. I'm Dre Trades.